When you talk about the energy drink market, most investors immediately think of Monster Beverage or Red Bull. But after the latest earnings report from Celsius Holdings, there's a serious argument that Celsius is becoming the most important growth story in the entire beverage sector. Today we're breaking down the Q1 2026 earnings report, the good, the bad, and why many investors believe Celsius could still outperform most of its competitors over the next several years. Hey there, my name is Anthony and welcome to Growing Your Wealth. Okay, so Celsius just reported one of the most important quarters in company history. Revenue exploded, market share hit new highs, Alani Nu integration is working better than expected, and the company now controls roughly 1/5 of the US energy drink market. But despite all of that, the stock sold off. So what exactly happened here? Was this report actually bullish, or are investors starting to see cracks forming underneath the surface? Well, let's break it all down. First, let's go over the numbers. Celsius reported Q1 2026 revenue of approximately $783 million. That represented roughly 138% year-over-year growth. Adjusted EPS came in at 41 cents per share, massively ahead of expectations, which were at 29 cents. Net income reached around $110 million. Adjusted EBITDA also surged. This was objectively a very strong quarter financially. Now, obviously, some investors are going to say, wait a minute, hold on. The growth acquisition is what drove this. And yes, that is kind of true. The giant story here is the successful integration of Alani Nu and Rockstar Energy into the Celsius ecosystem. Alani Nu alone generated approximately $368 million in sales during the quarter, and Rockstar contributed another roughly $67 million. Meanwhile, the original Celsius brand itself still grew around 6% year over year. And honestly, that's what makes this quarter so important. This is no longer just a one brand company. So here is the biggest thing investors need to understand. Celsius is transforming from a single product growth stock into a diversified energy drink platform. And that changes everything. Before, the company was heavily dependent on one consumer demographic and one brand identity, fitness-focused, health-conscious consumer buying Celsius drinks. Now, they own Celsius, they own Alani Nu, and they own Rockstar in the United States and Canada. That gives them exposure to multiple demographics simultaneously. Alani Nu especially has become an absolute monster. Better yet, they may become the monster destroyer. The brand continues dominating among female consumers. Trust me, I know my wife has the fridge stocked. And younger demographics, little guys. Retail sales reportedly increased 100% year over year. That's incredible for a brand that already had a significant scale. And management confirmed that the transition into Pepsico distribution, the system is going extremely well. That matters more than investors actually realize. One reason Celsius may actually be superior to many competitors in the sector is the distribution advantage it now has through PepsiCo.
Could this be the buying opportunity we've been looking for? Let's check in with John Fieldly. He's the well-caffeinated chairman and CEO of Celsius. Always find out. Mr. Fieldly, welcome back to Mad Money.
Glad to be here, just bringing the energy.
Well, I want you to bring that. But before we get started and talking about where you guys are, I want to know, and it's important, John, are we now set with your relationship with PepsiCo? No more changes where, we know exactly the moving parts are finished?
Yeah, Jim, when you coming off the heels of 2025, we've really restructured this organization, our portfolio. We went from a singular brand since last time we were here to a portfolio of mega brands. We'll dive into that with Celsius, Alani, and Rockstar. And we're the category captain of the energy category for Pepsi. That further strengthens our capabilities. We're strategically tied in, managing priority periods, and we're leveraging them for the best-in-class distribution and execution out there. So we further enhanced this and also the capabilities in the organization.
This relationship gives Celsius shelf access and global expansion capabilities that smaller competitors simply cannot match. Think about it this way. A lot of beverage startups can create hype. Very few can scale nationally, even fewer can scale globally. Distribution is the moat in beverages. and PepsiCo is arguably one of the most powerful beverage distribution systems on earth. Management said Alani Nu's move into PepsiCo's DSD system helped drive major sales momentum. That's huge because it validates the distribution thesis. And unlike many smaller energy drink brands, Celsius doesn't have to build that network from scratch. Another massive takeaway from this report was market share. Celsius Holdings now controls approximately 20.9% of the US ready-to-drink energy category across its portfolio. Let that sink in. I mean, just think about that. 1 out of every $5 spent on energy drinks in tracked channels is now going to Celsius holding brands. That is enormous, especially considering how dominant Monster and Red Bull have been historically. This is where the bullish argument becomes very compelling. This is what drew my attention to this business, the scalability factor and the massive growth runway like Monster had 20 years ago. And don't get me wrong, Monster Beverage is an incredible company, but Monster's growth rate is much slower now because it's already mature, it's established. Celsius, well, it still has hyper growth characteristics. So investors looking for aggressive growth often prefer Celsius because it combines rapid market share expansion, premium branding, healthier consumer perception, and the highly sought after international runway. Speaking of a runway, international revenue grew 55% year over year. And this may actually be one of the most underappreciated parts of the story. The company specifically highlighted growth in the Nordics, UK, Ireland, France, Australia, New Zealand, and the Benelux markets. Benelux, you like that one? In the Benelux markets, which is, well, in my opinion, that's pretty surprising. It's high end. Right now, Celsius is still primarily a North American growth story, but if management executes internationally the way it has domestically, this company could be in the very early stages of becoming a global beverage giant. Now, let's talk about some of the negatives because the earnings report, well, it wasn't exactly perfect. The biggest issue was margins. Gross margins fell from around 52% last year to roughly 48.3% this quarter. And investors clearly noticed it. The company explained that Alani Nu and Rockstar currently operate at lower margin profiles compared to the original Celsius business. I mean, I guess that makes sense operationally, but Wall Street, they don't care. They don't like margin compression, even if revenue is exploding.
How about Rockstar? I bet you can energize that. I mean, that's a big convenience store. We always see it there. And yet I was surprised how little growth it has right now. John Fieldly has not been able to get that one going yet, has he?
We're just getting started with it. We have some great marketing. We know how to connect with consumers in a cultural way, in an emotional way. We're going to bring back Rockstar. Lots of opportunities there. That's that core male consumer, which you look at Celsius and Alani, really hasn't really resonated well. But that's the big opportunity. It's over 50% of the category as well. And it goes head to head with some of those larger brands in the category.
You know, John, I've been thinking, you're the first person that has come out. At my restaurant that I used to own, we went from being a cocktail place to being a mocktail place. It's 50-50. You're the first person that's come out and said, you know what, mocktails are for real and they're growing, that they're not just a passing phase, right?
Yeah, what we're seeing in the energy category, over 30% of consumers that are consuming energy drinks in social occasions. And we know what's happening with beer and liquor sales. They're supplementing that. Energy is perfect for it, and our portfolio is perfect for it. When you look at right here, I have a pink lemonade ready for summer. We have, talk about some of the other cherry bomb flavors. We have dirty Alani flavors and mocktails written up that are doing extremely well in bars and restaurants as consumers are looking for alternative choices and spanning social occasions. We're also seeing consumption of energy drinks with meals, breakfast, and at lunch. So really seeing, the energy is becoming part of daily lifestyle, daily routine, which we've talked about on several times last time we were on the show. So we're capitalizing on that as more occasions are coming within this category.
Well, we're huge drinkers of your product in our office, and I found out that some of us like fizz-free. I don't know what that would possibly be like, but apparently it's okay.
That's phenomenal. That's our big push this quarter with Celsius Fizz-Free, getting ready for summer. That's a big segment within the energy category that's really been untapped. And our Celsius Fizz-Free line tastes phenomenal and is really refreshing for this summer.
This is probably one reason why the stock sold off despite beating expectations. Another concern is that core Celsius brand growth was only around 6%. Now, to be fair, 6% growth on a huge brand is still solid, but compared to the triple-digit growth investors have become accustomed to in the earlier years, some investors are probably wondering if the flagship brand is beginning to mature. And if Celsius brand growth slows materially over time, the company may become increasingly dependent on acquisitions to maintain hypergrowth. Well, there's also uncertainty surrounding Rockstar Energy. Rockstar sales actually declined 13% year over year in tracked retail data. So investors are asking, can Celsius successfully revive Rockstar, or is Rockstar simply a declining legacy brand? Management believes SKU optimization and integration efforts will stabilize the business, but investors, I need proof, and other investors, they need proof as well. And that's important because Rockstar could either become a valuable turnaround asset or a long-term drag on margins and execution. Even with those concerns, there's a very strong argument that Celsius remains one of the best investments in beverages. And listen when I say here, I have reasons. Here's why. First, the energy drink category itself is still growing globally. Second, well, Celsius has positioned itself as a healthier energy drink alternative. That matters enormously with, younger consumers. Consumers today, well, they typically care about sugar content, functional ingredients, wellness branding, and, lifestyle positioning. Celsius fits those trends perfectly. You can already see the shift happening. Energy drinks are increasingly becoming daily lifestyle beverages rather than occasional products. Third, the company now has a multi-brand strategy that attacks several demographics simultaneously. That's extremely powerful. That's pretty powerful. Fourth, PepsiCo distribution creates a massive competitive advantage. Man, this is the big one. I believe Pepsi that's going to kick it forward. And finally, the fifth reason is the company still has meaningful international growth runway. And when I say meaningful, just think of this as an untapped market for growth. Now, here's the difficult question. Is the stock cheap? Well, that depends on how you view future growth. Some investors think Celsius deserves a premium valuation because it's taking market share aggressively and still expanding globally. Others believe the easy growth phase is over and margins may remain pressured after the acquisitions. But here's what's important. The company is now generating real scale. This isn't just a speculative growth story anymore. This is becoming a major beverage platform with nearly $800 million in quarterly revenue. That's over 20% market share, strong profitability, and one of the best distribution partners in the world.
So I want people to understand that this is a story. I'm taking this phrase from you. More people, more places, more of it.
More people, more places, more often. That's our core strategy. You look at the portfolio, you look at the distribution gains, you look at the consumption occasions, and then we're going global. We're taking over the world. This week, we announced expansion into Spain. I had the team down in Australia kicking off the F1 inauguration and the first race of the year. We've expanded internationally. We're investing in resources as well, and talent and capabilities within this organization, and we're excited about this opportunity we see.
Do any of the Alani new people, did they stay on? Because, boy, I got to tell you, they must be working well with you.
They did. They have. We have a variety of those key partners and key strategic team members stayed on. Where we see synergies and opportunities is with our sales organization, field marketing, the back end as well. But we've taken a lot on as we further integrate. There's a lot of work here. We've been hired over 200 staff members in the first quarter of this year. So really excited. We're going big. We see the opportunity. We're capitalizing. We're building the infrastructure, and we're here to execute.
Wow. I got to tell you, what a break people are getting. Get a chance to get in after that amazing quarter. That was one of the best quarters of the year, John. Really was. One of the best quarters of the year.
And year.
Yep.
And year. $2.5 billion in revenue, $620 in EBITDA. Phenomenal results all around.
Couldn't agree more. I want to thank John Fieldly, Chairman and CEO of Celsius Holdings. This is the right stock to own if you're going to own the packaged good company stocks. Thank you, John.
Thank you. Cheers.
Man, money's back there.
And I like to give numbers on where I believe the company can go over the future years. So let me give you just some rough ones. This isn't etched in, doing deep dives. This is just rough numbers. Let's call this, they have these numbers in the bag, but I'm going to be conservative outlook. If they do only 10% revenue growth over the next 3 to 5 years, net income growth at 15%, and in all honesty, they should probably grow net income better than that. I would like to see them growing net income margins, and I fully expect that to happen. By the year 2030, I fully expect them to have nearly $5 billion in revenue. You know what? Let's just make it a clean. Let's make it a clean $5 billion flat, $1 billion flat net income, which bumps those income margins up to 20%. Let's slap a 30 times forward earnings and you get approximately $100 a share price around 2030. And before you say that's it, that's over a triple up from current levels, and you're not getting that in the S&P 500. Remember, this is what I'm almost certain will happen. What can happen? It's gonna be a lot bigger. So let me leave you with some wise words from the book of Isaiah 43, 18 through 19. Forget the former things. Do not dwell on the past. See, I am doing a new thing. Now it springs up. Do you not perceive it? I am making a way in the wilderness and streams in the wasteland. Just as God is making a new way for his people in Christ Jesus, look at Celsius and see that they are making a new way with new beverage integration and growth levers. So overall, I'd call this earnings report bullish with some important caveats. The positives, well, revenue crushed expectations, so now it's growing. Earnings beat, well, the Alani Nu integration is working. International growth is accelerating, market share continues expanding, and the Pepsico distribution is proving valuable. The negatives? Gross margins have compressed. Core Celsius brand growth slowed. Rockstar remains a question. And investors may worry acquisitions are masking slower organic growth. All in all, Celsius is building something much larger than a single energy drink brand. They are building an energy drink empire. And if management can continue executing at this level, the company could still be in the early innings of becoming a dominant force in global beverages. Let me know in the comments, all right? Just bam, let me know. Do you think Celsius can eventually challenge Monster and Red Bull long term? And do you think the stock sell-off after earnings was justified? I don't know. All right, that's it. If you want to know my thoughts on Adobe ahead of earnings, click right here. Click right here. As always, happy investing, and may God truly bless each and every one of you.